Welcome back. Wednesday morning, April 22nd, getting into another game plan for you here today. We're going to briefly touch on the market, briefly touch on how you should be trading this tape, which is extremely frustrating right now. And if it's not for you, God bless you, because I've been talking to a lot of traders who are just going batty right now. And you can see here what I'm talking about. We have a gap down in a bullish uptrend that should normally be a buying day. We actually got a trend day to the downside. If you look for a couple of spots to bid in here, you end up getting chopped around, and the most frustrating part is you end up getting the move you expected here intraday on a gap overnight. So unless you carried a little bit overnight, you didn't participate in that, maybe just this one move. Rest of the day, you get chopped around, probably a couple of small losses, maybe one small profit here. Next day, you get a gap up follow through, expecting the same type of follow through that you got here. Basically hit resistance and have a trend day to the downside. It's driving a lot of traders crazy right now. Unless you're a really skilled trader who is trading earnings, just pure technical trades are a little frustrating right now. And I want to briefly go over 3 different ways that you could possibly trade that right now. So essentially, these are suggestions for trading in a tape. Now, the reason I say suggestions for trading in a tape, I want to preface this. This is for traders who are primarily a technical bent on the way they make their trading ideas. This is not for somebody specifically who interprets the news, reads the financial statements, and does that type of trading. That's a whole different ball of wax and a whole different strategy than what most traders do. Quite frankly, most traders just read the tape. Maybe they'll find the news story, trade as a catalyst, and then ultimately trade it technically. If you are trading right now and find it a little frustrating, there's a couple of things you could do. Number one is drop down to lower time frames to find a trend. And let me just put that on pause for 1 second there. So what I mean by dropping a time frame, obviously this is the daily chart here. We're going to push it down to an hourly chart. We're going to look at the last 3 days, and we're going to combine the last 3 days with 5-minute charts. Now, essentially what a trader will do in this window here is, if you're not finding follow-through on the higher time frames, you will actually drop down to the hourly time frame and use the hourly time frame as your actual trend indicator. And we can actually take that a step further. I want to go over to this day here specifically. We're going to do multiple days, but I want to just briefly talk about this. So let's say, for argument's sake, the stock opened there. We have 2 things in our favor right now. For the entire day, the stock trades below the open, so that means that the current intraday order flow is selling pressure. And then we have these individual hourly candles as well. So just as a pure day trader, now not necessarily a scalper, but absolutely a pure day trader, this combination right here, trading on whichever side of the open it is and wherever the current hourly candle is trading, you could then drop into the 5-minute, 15-minute, 10-minute chart and only look for signals in that direction. So below the open, bearish hour, bearish hour. So these first 2 hours of the day you could have traded short, would have done nothing here as long as that candle was green. Could have traded here short as well. It was red. It probably would have got chopped around a little bit, and you can see that here. And then we have a big trend push to the downside. Another push to the downside, which we actually hit longer term resistance there, if you remember, on the daily chart. So pretty good multiple time frame analysis there, and a bounce. So this bounce here you probably would not have participated in. However, you did have 1, 2, 3 solid hours intraday where you could have absolutely have taken advantage of some shorter term trades. Now, if we take that same thought process and go over here, now we know longer time frame, we're in a bullish tape. So we have a bullish tape above the open, gap higher, which is also above the previous day's high. So a couple of good reasons to consider being long there. You have 1 hour, 2 hours, 3 hours of green candles there. So the first 3 hours of the day you would have traded long. Again, gap higher above the previous day, longer term bullish tape, clearly above the open here. Now you start to have a red candle, so 2 hours of doing nothing. And why do I say do nothing? You should be, at this point, bullish and bullish long term. So you're only looking for buy signals now on your 5-minute chart. So bearish hour, do nothing. You're looking for nothing. Bearish hour, do nothing. We get a bullish hour, which is this little blip here, so you could have participated there. And then the last hour was also bearish after we had that push higher. So you had 1, 2, 3, 4 hours out of 6.5 that you could have been bullish. Now, interesting trade here set up as far as weighing out what days to be long or short here. Again, we're just talking about a strategy to drop down if it makes sense for you, if you could make good decisions, and if your cost structure warrants it. After a very bullish day yesterday, we have 1, 2, 3 hours in the morning of bearish tape. Also, and again, the filter below the open as well as the hour. And you would have dropped down and looked for entry signals, probably this shooting star. We have a swing high here, another swing high here. So 3 hours worth of selling here, leading into lunch, leading into another selling hour, leading into an hour of doing nothing, which is essentially these push higher here on the 10-minute chart, and then one last push into the close. So if you're finding it a little frustrating, that's a great way to, you're not changing your style, you're still picking an edge, and you're only trading on one side. Essentially what it's allowing you to do is to adapt to make income without necessarily adding to trades. And it's a very, very clear strategy of taking those intraday trades with change from the open and where the previous hour is. So what we're going to do now is we are going to take a look at stocks that are in play today in earnings and see if we could come up with some pretty good technical setups on that. Okay, so on the earnings front here, we're going to do weekly chart, daily chart, looking for some setups. Abbott Labs, clearly bullish tape all the way along. A lot of these stocks had this one push down. I'm going to kind of ignore that. If you know how I draw trend lines, I don't like to go through price action. However, I also very, very much like to make sure that I pay attention to where price is actually trading in a significant manner. Just one little push down through price, that's not, it's definitely where price traded, but to me it's not a significant level because I'm looking for history. I'm looking for real solid history, and that's what we got here. So looking at Abbott Labs, we have potential change of trend here on the daily chart. We are kind of basing here. Actually, you know what? I'm not going to call that a potential change of trend because we did not break the trend line. We do, however, have a pretty clean technical setup. I actually like this long. And again, I'm not doing anything with earnings, pre-market, post-market. We're just doing the charts as if you did them 7 o'clock at night or 7 o'clock in the morning. Not factoring in the earnings. We're just looking at the technical setups to see if they coincide with the way the stock trades on the open. So I would fully expect this to follow through on the open today. Stay above this trend line, looking for this to be the first target. And if we push through, you can see we got a lot of room. So I like being long Abbott there. Next we have Boeing. Boeing's actually a pretty interesting play. It's sloppy here from day to day on the daily chart. However, long-term weekly chart playing out very, very clean where we finally pushed through, held above this level. Let me actually pull this out here. This is what you want to see. You want to see a stock break through a significant level, hold. The longer it holds, the greater the likelihood of following through. I would fully expect Boeing to follow through today as well. Daily moving averages are kind of kissing here, converging, but clearly the 50 is still moving higher. Triple top here in BK. I like it above 41.75, 42. However, if you zoom out here and you take a look, we basically have a head and shoulders top and a wild head and shoulders top. Now, what's interesting about this is it's clearly an uptrend. Clearly, both moving averages are moving higher here. Now, if you know anything in detail about price action, the whippier the price action, the wider the price action, the uglier the potential move to the downside will be. So what I basically mean by that is if you push higher and have a nice tight flag, okay, which this is not, again, I'm just pointing out what it should look like, you should continue higher. The quieter the price action after a move higher, you will push higher. Generally, that's technical analysis. But look at this wild swings here we're getting. So we are moving higher. We are trading near the highs. But this is usually a harbinger of doom when you get wild swings like that. Now, I grant that it's only $6, but it's all relative to the stock you're trading, and you're seeing a lot of indecision on intraday candles. A little bit of an advanced lesson there, but I'm not expecting this to follow through just because of how wild these swings are. That's usually institutional distribution. All right, next, Citrix. This is a fun stock to day trade. Earnings coming out today. I do not see anything here other than this, which is a much, much wider term pennant. And on this pennant, consolidation leads to an expansion in volatility, old Larry Williams term. I'm not going to call anything here just for the fact that, again, pure price action. It's trading pretty much between this price, 56, and let's call it 64 for 8 months. There's nothing going on in this stock. I will tell you this, though. This must be on your radar because of the way it's trading right now. This consolidation will lead to some sort of volatility, and you want to be on top of that. We're not going to call whether or not it's going to break out higher or lower. There's no really institutional obvious trend, and again, I'll show you exactly how I do it in the mentoring room. We're smack in the middle of the last 7-8 months. There's no edge there. However, the consolidation will lead to an expansion of volatility, which will lead to a trend. So you need to have this on your watch list to see when it breaks out, let it flag, and then hop on board. So a good chart there to be looking at, setting something up for the future. No edge there at all. All right, DHI looks pretty good. Love this long-term uptrend. I don't like the indecision weeks we're seeing here, and what I mean by indecision is this is clear fuel. You get these big green or red candles followed by higher highs, higher lows. We're getting a nice big green candle here, then indecision, indecision, indecision. So we got 3 weeks of indecision in DHI. As a matter of fact, this week is an inside candle, so we got to push to the upside, inside candle, 3 weeks of indecision. Clearly showing that on the daily chart as well. So what am I looking here? A little bit cleaner than we saw in the other chart, where it was a really sloppy up and down in the after a move to the upside. I would actually be looking for this stock to follow through and push to new highs, but we'd have to get past this 29, 25, 29, 50 level there. Next we have eBay. I don't see an edge at all in eBay. Again, if we drew this line across the middle here, we're pretty much in the middle. I think that would be a complete guess. All right, EMC. I like this as a short sell. Got a pretty clean downtrend here. Whether you draw it on the weekly chart or whether you just use the moving averages, I would much prefer to be short. The only thing that I don't like about this trade is this. We keep pushing down to this level and getting rejected. So if you look to short sell EMC on earnings, or just as a technical trade, the upside potential of the trade is limited. So that means that you should not be doing anything until it clears the support level, because what's the risk reward? It's 1-to-1. Why take a trade if you're going to make $1, spend $1 to make $1? Now, if it clears this level, we got a little bit more room to the downside, down to the 23, 25 level. So a little bit of room. You got a few dollars if it pushes through that level, but it's a sell short, but not until it clears 25. All right, next. Everybody's favorite right now, Facebook. Charts are saying it's moving higher. I mean, there's really no other way to put it. We got a little bit of choppiness there for about 6 or 7 months, and we pushed through on a really solid week, and we flagged. Pulled in with the rest of the market yesterday, but it did gap up. I think that you have to be long this stock no matter what. Got a wider, longer-term flag here. I actually do like the stock long, just based on the charts. Let's see what happens when earnings comes out today. FFIV, I see absolutely nothing other than the fact that we're possibly breaking out of this trading range finally here. But even if we do, then we have this gap fill. There's not really a massive amount here to get excited about. I would stay away from FFIV unless earnings are a huge shock and gives us some sort of catalyst. KO clearly in a downtrend, but you do have big support at 39, so not a lot of room to go there. You'll hear me say that a lot, room to go. How much profit potential? It's one thing to take a trade, it's another thing to take a trade that has room to go where you can make some money. Las Vegas Sands, LVS, absolutely nothing, stuck in the middle of nowhere here. Mickey D's, same thing, in the middle of nowhere. Moving averages are about to cross to the downside, but no edge there. Qualcomm, slightly pushed to the downside, but if you go out here on the dailies, again, we are going to ignore that because this is really the price action here. We are consolidating into a wider term pennant, so we're probably going to see a week or so of a little bit more consolidation and then pick a direction, but nothing to do there as well. Be patient. AT&T, let's zoom out and see if there's any room below the support level. The stock's been trading in the same price area for 3 years. Nothing at all to get excited about there unless it breaks 31 with some sort of momentum. Texas Instruments. Wow. How many more stocks are we going to see in a pennant? The market is setting up for an increase in volatility in a big way. We are seeing it in so many individual stocks. We're seeing it in the market itself. Let's actually go out to the Russell 2000 before we wind this down. Russell still looks okay. Last but not least, we have Xilinx. Nothing going on there either. We did have a potential change of trend from downtrend with capitulation into an uptrend. Yeah, I don't get excited about this either. It's basically, again, same thing as what I drew before. You are essentially in the middle of the last year. No edge there. All right, so some of the better ones we looked at, definitely Boeing was a good one. DHI was a good one. And a few. Facebook still have every reason in the world to believe it's going to follow through, and quite a few stocks doing absolutely nothing. So again, I can't stress this enough. I'm just going to pull it up on the screen again. One of two things or three things are going to happen. You're going to look at those earnings plays, and you're going to wait for them to settle in technically. For most of you, some of you know how to read those. I'm going to the general population here. Extremely patient to wait for the higher time frames to resolve. We've talked about it multiple times here. Consolidations leading to a volatility, and we're seeing it across the board. Or drop down and use that 1 hour time frame change from the open strategy that I had just discussed. Have a great day, and remember, continue to be patient.